So non-grantor trusts are basically it's a trust that has been set up. It's an irrevocable trust, and to be classified as a simple trust, I mean it has to meet certain criteria set up by the IRS. Okay, so whenever you hear the term simple trust, it means it has these following characteristics. All right. So the first element is the trust instructions dictate that the trust income must be distributed to the beneficiaries annually. Okay. So if the trust instrument says it's an irrevocable trust and it says, trustee, you must distribute the income that the trust principal is generating every year to the beneficiaries I listed, then you have a simple trust. Okay. So here the distribution of the income is mandatory. It's mandatory. If the trust instructions say you must distribute the income every year to the beneficiaries, then you have a simple trust. All right. Now there's no requirement to distribute principal, and there's no requirement to distribute to charity. So if it meets this criteria, then you have a simple trust. All right. So when the trust beneficiaries receive their distribution of monies or whatever that's in the trust, they file that distribution of income in their individual 1040. All right. So here it simplifies the process because the income that was generated by the trust, when it's distributed to the beneficiaries have to file on their 1040 the income and pay at their own income tax rate. All right. So the simple trust, they do have to file their 1041, which is the income tax return for trust. It's called a 1041, not a 1040 like individuals. And it must have its own EIN. It must have its own employer identification number. And it's very simple to apply for an EIN for a trust. You just go online, irs.gov, and go to the apply for EINs, and you just go through the different selections of trusts. If you need assistance, I've done this hundreds of times. I'd be more than happy to help you apply for an EIN for the trusts. Okay. Now the trust must pay capital gains taxes on the earnings. However, capital gains taxes don't have to be distributed, only income. All right. So these are the main elements of a simple trust. Simple trusts also get an annual $300 exemption. Okay, so simple trusts on the IRS rules, they get a $300 annual exemption. So remember that the income in simple trusts, they must be distributed. However, capital gains it's not mandatory for capital gains to be distributed to the beneficiaries. So typically the $300 annual exemption, it's usually applied to the capital gains since it doesn't have to be distributed. Okay, it's optional. But the trust income, again, it must be distributed under the simple trust rules. Now, it's interesting that capital gains under Texas state law, it's considered principal. So again, depending on what state your client's trust is, you have to check with that state's rules to see what is defined as principal and what is defined as income. But here in Texas, capital gains are not considered income. They're considered principal under Texas state law. Okay. So therefore, and that's why simple trusts are not required to distribute capital gains, because under state law, capital gains are considered principal.